Hello everyone and welcome back. My name is Greg Furman and these are the market positions for September the 6th, 2017. Now our first trade for tonight is going to be again in the Forex market, and we're looking at the British pound US dollar. Now as per this week's Forex Weekly Outlook, I discussed extensively that the British pound, in my respectful opinion, remains grossly undervalued across the board here, but particularly against the US dollar. Now when we look at the VantagePoint indicators, I had also mentioned this week in the Outlook that we have a fresh triple EMA cross. We have a trend line here that is a problem, but we've broken through that trend line. Our neural index has given us basically a 3 to 4 day warning that this was going to happen, along with our predicted short, medium, and long-term differences, and of course the VantagePoint strength indicator. Now our predicted MACD continues to advance. We need to break above this zero line. Very, very important. But the predicted RSI pushing above 60 at 68.4 suggests that we are going to advance further. Now, once again, when we're doing our analysis, we also want to make sure we're checking those individual crossovers from VantagePoint. Our short term looks good to the upside. Our medium term has been up for several days. And of course, our long term looks excellent too, only 3 days old. Now, if we look at our past long term crossovers from VantagePoint, in most cases, that has lasted for upwards of 10 to 15 trading sessions each time, whether it be to the upside or the downside. So we're only about 3 days into this long-term crossover from VantagePoint, suggesting we have plenty of upside potential. Now, once we've looked at all of these things, we then and only then do we go to that all-important daily report to help us fine-tune our entry point for intraday trading. So the bigger trend here is clearly turning to the upside. For tomorrow, we're looking for a minor pullback to 129.76. We're then going to target 130.61. Now the markets are still a little bit thin as we're coming out of summer trade, but I'm expecting much bigger moves in the very near future in the currency markets and potentially in the stock markets alike. Now when we're looking at stops here, we want to make sure that all stops are below our current trend line area. Our current trend line area is coming in at the 129 area, so all stops, guys, must be below that level. If we look at our critical VantagePoint 18-day predicted moving average, which is also an excellent area to put our stops below, if we bring this over and advance this, we can see 129.31 is that key VantagePoint pivot area, that 18-day predicted moving average at 129.31. But I would put my stop a little bit further below that, around 128.80. Now our second trade for tonight is going to be in the ETF market. What we're looking at is the ProShares Short S&P 500, the SH. Now I've been a strong advocate over the last probably month or so that the equity markets are becoming grossly overvalued here. The valuations, there could be a very heated debate on both sides for both the bulls and the bears, but in a risk on or risk off environment, you know, right now, in my respectful opinion, we are absolutely moving towards a risk off environment. And with the equities at these very lofty levels, the S&P 500 holding below 2,500, it puts pressure on the downside to the S&P 500. So basically, guys, we want to bet that the S&P and the global equity markets are heading lower. So when we look at a place to sell the S&P 500 or a basket of equities or stocks, we again want to look at this SH. We have significant trend line resistance coming in at 33.25. We can see that we also have very, very strong support now coming in at the 32.60 mark. We are closing very close to this key VantagePoint level, 32.98. We're closing at 32.97. The VantagePoint short-term indicators are rolling over clearly to the long side here. Our neural index is turned higher. Our strength indicator is turned higher. We have a crossover, the medium term crossing over the long term. predicted difference, proprietary indicators to VantagePoint that again tell us that the global equity markets are probably moving lower, which will push this particular ETF higher. Now, our predicted MACD struggling along the zero line, but our predicted RSI has recovered to 50.2. So it looks like we're sitting potentially right on a turning point for the S&P 500 to move lower. Now, when we look at those individual crossovers, our short-term crossover you can see is bouncing strongly off of this trend line. Our medium-term crossover and our long-term crossover are still down, but we're using those additional indicators from VantagePoint to tell us to pick an early turning point. Now, will it be volatile? Yes, of course it will, guys. But once again, we want to get in a little bit early if we think that this is getting ready to move. So with that close of 32.97, we're looking for a minor pullback to 32.65. We then target 33.18. Now, I know that this particular ETF has been very, very choppy, but we have significant support at 32.60. So all stops below that area, and a bigger target here, again, if we look at this particular ETF, over the last 6 months, we've been up at $35 per share. Now, if the S&P 500 sells off, we will very quickly advance back to that particular level.